Gita Gopinath, the Deputy Managing Director of the IMF, has said an escalation of trade and tariff tensions between US and China would have dire economic consequences around the world. So if we were to go into this sort of scenario, then that would have radical consequences for supply and demand balances, and as well as what oil demand growth in 2025 and 2026 might look like.
Hello and welcome to our 11th episode of Oil Insights. I'm your host, Harry Tchilinguirian, Group Head of Research at Onyx Capital, and I'm joined today by Onyx Research Associates Vincent and Martha Dowding. Now, before we start the show, as always, please like and subscribe to the podcast. I invite you to visit Onyx's LinkedIn site and YouTube channels for more interesting and exciting content. Now, today is U.S. presidential election day, and at the time of this recording, on November the 5th, 11:45, London time, we do not know who the victor will be. So in the lead up to this Tuesday, the oil market, I think, has been relatively steady in terms of pricing, and as we got into the studio, Brent was trading a little bit above $75 per barrel. Now, the implications of who will become the 47th president of the United States will have a profound impact on oil markets, not least because of the foreign policy implications that the new leader of the free world will adopt. Mr. Trump's relations with Russia, Saudi Arabia, Israel, and China in particular will be, of course, very different from those of Ms. Harris. Domestic policies will also be different, and how friendly the new administration will be to the U.S. oil and gas sector will matter regarding all things supply. Now, according to the prevailing consensus on the cable news networks, well, the election is too close to call. Polls are giving Kamala Harris a little bit of an edge, while the odds in the betting market are putting Donald Trump on top. In this episode, we're going to discuss some of what we believe are the more salient areas that will be affected by a new administration and their potential implications. Now, elections have consequences. That apparently is what President Barack Obama reportedly told Republican members of Congress after his inauguration in 2009. Unfortunately, there are too many areas to include, so hopefully we'll be able to cover the more interesting ones today. We are just presenting our opinion and views, and would gladly like to hear from you in terms of what you think matters. Please put your comments in the section below. Now, before we discuss the implications of the U.S. presidential election, as always, it's always worthwhile considering how the market is positioned heading into these elections, effectively these elections being an event risk. Does the positioning reveal an expectation of prices moving in one way or the other? Well, we're going to find out very quickly with Martha Dowding. So Martha, can you walk us through some of the recent positioning on Brent leading up to this Tuesday, and what is the data essentially telling us?
Yeah, of course. So in the ICOT data for the week to the 29th of October, so last Tuesday, we didn't really see a massive change from the managed by money positions, so speculative funds. They added about 10% to their short positions, and they continued to remove length. So this is the third week of length removal on a net length basis. This is the third week of length removal on a net length basis, and there doesn't seem to be a directional bias in either way. So it seems that there is this really kind of wait and see attitude from the managed by money positions in Brent.
So they don't want to stick their neck out, is what you're saying.
Not, sorry.
Okay. And then when we look at the data from a long to short ratio, I think that's also certainly interesting, because the long to short ratio on Brent has been low since pretty much August, and we've troughed in September as far as this ratio picked up a little bit. What are we doing in the latest data?
So we've seen the long short ratio drop below 2 to 1 again last week. So there have been the geopolitical ups and downs, which have been the main drivers, but there's this hesitancy that we've just been saying that there's not this risk on attitude at all. There is the poor macroeconomic performance, the OPEC plus questions as to whether and when they will return the barrels, which have been solved a little now, but this was for last week, and even the direction of central bank policy with the Fed and the meeting this Thursday, we believe, to decide the rate policy. So there's just so much in decision and direction.
So we always like to contrast what the commitment of traders data says relative to our own proprietary measuring of the CTA positioning, and of course they're risk takers. And are they showing, or at least is our assessment of what they're doing, showing anything different?
I think when we're looking at the total CTA positioning for the main energy futures, which we combine to look at how it will impact the crude most, this is still net negative. It increased to close to flat in October and then dropped again, and it has then improved. So last week we saw about minus 127,000 lots on the 30th. And we've seen this recover again to around minus 90,000 lots, still net negative in the positioning basis. And this shows that although we are not net negative, the algos have plenty of room to either shoot up or shoot down. And this is kind of still in no man's land a lot, although it is negative.
Well, interestingly enough, I guess this morning, one of our lead crude traders was saying that the market was dead.
Yeah.
So essentially, well, I guess in terms of positioning or wanting to take a position, given how close this election is going to be, I think people are going to be looking in terms of the outcome first before dipping a toe in either direction. Now, with the background of positioning covered, I think we can now turn to looking at some of the divergences that we note between what would be a Harris or a Trump presidency. And most of these areas actually boil down to foreign policy. And so, starting with foreign policy, I'm going to turn to Vincent. I'd like to start with sanctioned countries. Now, of course, in the context of the U.S., there are really three elephants in the room: Iran, Venezuela, and Russia. But I want to kick off with Iran and Venezuela. What can we expect from either a Trump or Harris administration when it comes to either one of these countries? So maybe let's start with Iran.
Yes, so the overarching narrative for either Iran or Venezuela is to what extent or how these sanctions will be implemented. So with Iran, with the Harris administration, we can expect the status quo, its current containment strategy to continue. So perhaps that would involve a looser implementation of these sanctions. Iran will probably see little impact on its crude exports under a continuing Harris administration. And indeed, their crude exports, according to petrologistics data, have been running around 1.5 million barrels per day. Under Trump, of course, he, given his harsh criticism of the Biden administration's loose enforcement of sanctions, which has allowed Iran to rebuild its cash, we can see perhaps a harsher sanctions enforcement policy return to what we saw in 2019 to 2020, when Iran's exports actually fell below 500,000 barrels per day. That kind of financial and trade repression we saw under the first Trump administration would likely lessen Iran's ability to finance itself and by extension its proxies in the Middle East, and therefore reduce the Iranian influence in the region. On Venezuela, so the Biden-Harris administration, they have made some overtures earlier this year, so that's conditional on the conduct of proper elections, as they say, but there hasn't been much accommodation, as is the case with Iran. But we could expect that whoever wins, either Harris or Trump, little change on policy in Venezuela, perhaps with Trump more friendly to oil and gas, to American companies, more accommodation to Chevron, who do operate in Venezuela.
So I think the bottom line when it comes to these two countries is that Trump is really going to go for tightening the screws on Iran again, because obviously this has repercussions, as you were mentioning, in terms of Iran's ability financially, one, to sustain itself, or two, sustain its proxies in the region. And I think that's a kind of policy that is also the kind of policy that Israel would like to see implemented. Venezuela sort of is forgotten, I would say. In essence, we haven't really heard too much during the campaign about what they would do. I mean, in terms of either one of the candidates relative to Venezuela. That, to me, I would agree, is going to be a sort of status quo picture. We don't expect really much either way in terms of Venezuelan output. Maybe a little bit, as you were mentioning, as Chevron gets some accommodation or maybe greater accommodation, I should say, from a Trump administration. Now, I was mentioning three elephants, so I'm going to turn to Martha, although it's a Russian bear rather than an elephant. But let's talk about Russia. And I think this is where probably we're going to have the biggest and most significant differences in terms of approach between Harris and the Trump administration. So again, it's very hard to obviously figure out exactly what's happening, but we can have scenarios. So, I mean, what do we think could be the type of relation that uh, uh, President Trump may adopt versus what President Harris would do?
To start with Senator Harris, I think at face value, we have seen this kind of rhetoric that she will continue the policy that prevailed under President Biden. It seems that there's nothing really been mentioned in the campaign to suggest otherwise. And so we think that there's going to be kind of that scaling up of support in Russia and Ukraine as if and when there's any kind of escalation of military conditions. So we have seen this kind of escalate during the war already. The US has stepped up its military aid, especially the type of weapons it's providing, getting more and more, expensive to the country. It doesn't seem to be any kind of imminent breakthroughs in terms of a peaceful settlement right now, but it would be facing to the Harris administration, if it comes to be, would be facing these decisions. These are hard decisions in terms of granting permission to Ukraine to use these longer range weapons, which have historically not been used. So that could strike inside Russia rather than just that kind of buffer zone that we've seen being struck so far. And also we've seen the kind of developments recently, which may push the US to make these more kind of grand moves, like the deployment of the North Korean troops as well into Russia.
So I think for President Harris, what we're really looking at is if indeed it's a continuation of the current policy, and as you said, there's no indication during the campaign that she would adopt a different strategy. Well, it's having to decide, and the U.S. from the onset of the war in Ukraine has been essentially reluctantly giving up some of the constraints in terms of weaponry. And we saw that from tanks to missiles to F-16s, and now we're looking at long-range strike missiles. The interesting thing, and I think this is one that hasn't been talked about, is what would they do when you have foreign involvement and the presence of North Korean troops? Well, we don't know what they're going to do, but it's certainly a challenge. Now, a would-be President Trump, of course, is going to be doing something, I think, relatively differently than what would-be President Harris. So, what's on view on the Donald? How is he going to behave?
Well, I think looking at his relationship with Vladimir Putin, I think he comes at this from a different angle and has that different base of relationship, which may help open doors for him in terms of a solution with Ukraine. It seems likely that if there were to be a solution, the brokered concession would likely involve the contested territories that were contested prior to the war, like Donetsk and Luhansk regions. And this would be maybe in exchange for a promise of no NATO accession of Ukraine, alongside formalizing the takeover of Crimea, but on any hand, President Zelensky of Ukraine isn't going to be very happy with this and likely object. But I think there's definitely no means of guaranteeing the constant support for Ukraine that would be more kind of expected in the Senator Harris's.
Yeah, I think that's a really good point you raised, because whatever the personal relations that Donald Trump thinks he has or still has with Vladimir Putin and his ability to end the war within, what did he say, 24 hours or 48 hours? Irrespective of that, there is this clear divide in terms of, and we've seen a number of people on the Republican side criticizing how much money is going to Ukraine rather than obviously helping people at home. So Donald Trump is more likely to withdraw support to force a conclusion and the war on terms that would be agreeable to Vladimir Putin. So I would imagine probably also like denying access to NATO, for example, would be another element on top of concession of territory. So
I think, I just think from an oil perspective, which I kind of missed there, I think that bringing it all back to oil, it comes back to the sanctions that you mentioned. It seems more likely under Trump to have those sanctions kind of unilaterally lifted. So this is so right now we have sanctions on individuals and companies and exports. And I think we could see these either be significantly reduced or just completely undercut. So I think we'd have to see how Trump speaks to the European allies with this kind of notion. But I think if it gets the war done, I think that will be interesting to see who agrees.
Yeah, I mean the last point you raised, of course, is a super important one because, you know, at the beginning of the Russia-Ukraine war, the U.S., the U.K. imposed unilateral sanctions before the Europeans and through the EU eventually developed their set of sanctions. So yeah, Donald Trump, if he were to become president, could unilaterally lift U.S. sanctions, but in terms of overall impact, you would have to have the Europeans follow and then lift their sanctions in terms of barring the imports of Russian crude or oil products, or even being more amicable to receiving Russian products that were refined from Russian crude, but in different areas, et cetera, et cetera. So at the end of the day, even with all of this, Russian production really hasn't suffered that much under sanctions, right? So we essentially had a rerouting of Russian crude flows, with Russia taking mainly its oil to India and China. So I'm just curious, and I don't know if you have a view on this, as to whether or not, if all these sanctions were lifted and Europe were to follow, would there really be any much change in the oil flows? Would we go back to something like we had pre-war, or are these flows now newly entrenched?
I think it would depend a lot on kind of the freight rates and kind of the movement, whichever. I think at the end of the day, they're going to do whatever's cheapest to do and whatever they can get the most money for. I think for certain companies who have had a bit of a wrist slap for dealing with, I know in naphtha, there have been a few players like who have been kind of found out using Russian naphtha. And I think that may lead to them kind of being more hesitant, or the Russian side kind of, taking offense and not wanting to work with them. I think it'll be really interesting to see how entrenched these routes are now.
Yeah, I think that point is, especially in terms of, again, back down to economics and cost. India has said, and India obviously being the main off-taker of Russian crude, said it's all about the price. And, you know, when you think about being able to get, in theory, Russian crude oil below $60 per barrel, at least on a FOB basis, then if you can, you'll do it. And for the balance of trade and the balance of payments, that's pretty good for your country. But if you lift the sanctions and Russia were allowed to then re-export at market prices, then some of the rerouting of trade that we saw could be unraveled, and because India would actually have to pay the market price. So, but continuing on foreign policy, I mean, we looked at Iran, we looked at Venezuela, we looked at Russia, but I think, focusing now a little bit more back to the Middle East, I think there's some clear implications of, in terms of relations with Saudi Arabia on one hand and Israel on the other, with whoever is going to be the next president of the U.S. So, I mean, let's start with Israel, Vincent. I mean, what do we think the implications of either one of the candidates is going to be?
Cool. So, firstly, both Democrats and Republicans are both of the agreement that that they both back Israel's right to defend itself, and to date, military and economic support has not been lacking in this respect. There's bipartisan agreement in this, but looking ahead, I would say relations between President Biden and Prime Minister Benjamin Netanyahu have been strained, and it's difficult to see whether that would change under President Harris, even as the US seemingly have managed to restrain Israel in their recent retaliatory attack against Iran back in early October. Of course, Harris has a very tricky balancing act to do, supporting Israel on the one hand, but also being pressured by the more progressive wing of the Democratic Party to lessen or even withdraw support, and to achieve a ceasefire and a lasting solution for Palestinians and their right to self-determination. Of course, Harris has actually not laid out any explicit plans during her campaign about how that will be achieved. But on the other hand, we would say that President Trump has more sway and is actually more likely, if anything, to achieve a lasting peace, because his relationship with Netanyahu is on more solid terms, and his actions when he was president 4 years ago likely brought him more credibility in the eyes of the Israeli government.
Where did you get that credibility? Like, what would be a good example?
through various actions. So, in December 2017, Trump formally recognized Jerusalem as Israel's capital and stated that the American embassy would be moved from Tel Aviv to Jerusalem. And under Trump, the US's stand against Iran will be undoubtedly more hawkish than that of Harris, and that would be Israel's preference. So similar with Vladimir Putin, Ukraine, Mr. Trump will have a better chance at brokering a peace deal and negotiating, getting concessions from Israel. However, a two-state solution still looks out of reach as both sides contend that Jerusalem is their capital, so that's quite contested. But of course, in terms of deflating this geopolitical risk, it does seem that tied to oil prices, Trump does have an edge here against Harris.
I think we're gonna probably in the comment section get a little bit of pushback on that one, but but I suppose from a more like practical, prosaic point of view, the ability of Trump to extract concessions from Netanyahu is probably a little bit better in my view than the ability of a future President Harris. And so, and what form will those concessions take? Is it returning some of the territory in the West Bank to Palestinians? But at the end of the day, either one, when it comes to Harris or Trump, if they were to become president, and their ability to find a lasting solution, well, when people talk about a two-state solution, the biggest problem is the fact that both claim Jerusalem as their capital. So how we're going to get there, I don't know. And at the end of the day, Trump really has the edge or not. Well, we'll see if he's elected president. But that's a tough call. Now, again, staying in the Middle East, the other key relation, and which obviously is very important for not only oil supply but the sort of balance of power and influence in the region, is a relationship with Saudi Arabia. Now, the relationship between the U.S. and Saudi Arabia goes back a long, long way. So back in 1951, the two countries signed a mutual defense assistance agreement that facilitated arms sales and basically allowed the establishment of a U.S. military training mission just by Riyadh, if I'm correct. Now, this has sort of remained the centerpiece of their security relation. And when we start looking at what could be relations with Saudi Arabia, we have to remember that pretty much from the get-go, President Trump and Crown Prince Mohammed bin Salman, well, that was not necessarily, what I'd say, the best start of relations. Even, when you think back about it, during the presidential campaign, then candidate Biden had some pretty choice words for Mohammed bin Salman following the murder of journalist Jamal Khashoggi. And he vowed when he was campaigning to make Saudi Arabia a pariah state. So you can understand that, the relationship under the current administration in Saudi Arabia is certainly not a particularly good one compared to what it was in the past. Now, if it's not what it used to be, what can it be, Martha, when we start thinking about either one of these candidates?
I think looking at Kamala, all we can kind of see for her actions in the future is what she's done so far in the Senate. So in the Senate, she voted to withdraw the military support for the Saudi campaign in Yemen, and she signed a resolution accusing Mohammed bin Salman of organizing the aforementioned murder. So she's also called, in terms of her rhetoric, to fundamentally reevaluate the relationship with Saudi Arabia. So I don't think that's going to be an easy fix to that relationship, but it may be brought more to the forefront than if Trump becomes president. It'd be interesting to see what choice she makes in terms of in the presidency compared to the senator role. She either stops the engagement with Saudi and they kind of reluctantly accepts that it's not the perfect ally, but it is useful to have something out there in the Middle East. But it also is important to see the change in relationship between Saudi and Iran recently. So we'll just have to kind of wait to find out what kind of choice she makes. In terms of Trump, they may be more accessible, and they won't be so. He's not so close to the remarks that Biden has made, and it was the first foreign official visit that Trump made when he was president last time. If you remember.
What's the Saudi? Yeah.
If you remember. So I think he's in better standing. Same with what we've said so far is that since he has been president, he has these relationships. But I think he could maybe. I think it would be tricky to see whether he could actually lean on the kingdom to, produce more or less oil, because we've seen the market jump and fall on his tweets before, and he has him having like the ear of these powerful people. But I think at the end of the day, we have seen Trump do these kind of tweets making the market jump, talking about OPEC in a way that may have been lots of people's first times even kind of knowing what OPEC is. And we have seen him in the past being able to broker disagreements between the kingdom and Russia back in the day. So, of course, the landscape is different now, but it would be interesting to see whether, I'm sure he feels like he could do that again. It'd be interesting to see if he could.
Trump's, I think, feels he could do
that's
everything.
right.
So, as we've seen in his recent incarnations of McDonald's, garbage collection, and other duties. But I think you raise an important point. I mean, Trump may have obviously a better road to rekindling a relation with Saudi Arabia. And I think that if he does become president, in the context of what we're saying about Iran and obviously squeezing Iran, you would be, as he did when he was president, lean on Saudi Arabia to fill that supply gap, because Saudi has the spare production capacity. If we were to lose another 1 million barrels a day of Iranian crude oil exports, well, that obviously leaves a lot of room for whether it be Saudi or other major producers in the region to step in. But I'm just taking just picking up on what you said, like that even for Trump, the landscape has changed. And I think that's interesting, because I'm just wondering, has Saudi Arabia moved on? And it may have not moved on completely from the U.S., but the fact is that, I mean, we can't like turn a blind eye to the fact that the Crown Prince Mohammed bin Salman basically received Iran's foreign minister, Abbas Araghchi, in Riyadh on the 9th of October. So clearly, Saudi is sort of repositioning itself a little bit. And whether or not a President Trump or President Harris could bring them back under a sort of Abraham's Accord umbrella, it's a tricky one. But my take would be that he probably has a better chance than she does in terms of at least sort of reorienting Saudi policy a little bit back towards the U.S. Now, I mean, we talked a lot about geopolitics, foreign policy, relations of whether of Mr. Trump or Ms. Harris with different countries. So I want to come to a sort of different aspect of foreign policy, and that is commercial trade policy. And here, it's geopolitics is just not just about relations between leaders, but geopolitics in the sense of international trade. And here, the very obvious elephant in the room is the possibility for escalating tensions between the United States and China. So I don't want to set aside possible confrontation over Taiwan, because that is yet another issue. But I want to stay focused on the more economic dimension and talk about the U.S. and China. I mean, there's been a lot of talk of trade war, and so how do we see these two candidates in this context?
Yeah, so President Trump has always been a strong advocate, even before before 2016, of using tariffs to level the playing field and advance his America First agenda.
Yes, and I think, isn't he famous for saying tariff is the most beautiful word?
Yeah,
Beautiful
it's a great
words.
word.
So
Most beautiful words. And he actually set about implementing this. So during his first presidency, he imposed various tariffs on China, which, interesting enough, the Biden administration did not reverse these tariffs. Initially, back in 2018, first announced, that came as a surprise to a lot of economists, politicians, analysts. But now, 6 years later, this has become a bipartisan stance in regarding trade and China. One of the few things that Democrats and Republicans have been agreeing on. However, Mr. Trump appears to be the more hawkish candidate, with a vow to swiftly impose a 60% tariff on all Chinese goods and at least a 10% levy on
if not more, depending on his what day he woke up on.
Yes, so yeah, that would include EU on the other countries as well. So outside the inflation concerns and potential consequences, negative consequences for the US consumer, Gita Gopinath, the deputy managing director of the IMF, has said an escalation of trade and tariff tensions between US and China would have dire economic consequences around the world. So I quote, output is going to be much lower than what we're projecting for all countries in the world. There's going to be pressure on inflation, so that's not the direction in which we should be going, end quote. So the IMF is concerned that the global trade war would cause a significant 7% loss of global GDP, which is more than France and Germany combined. And so if we were to go into this sort of scenario, then that would have radical consequences for supply and demand balances, and as well as what oil demand growth in 2025 and 2026 might look like.
Mhm. No, I mean certainly that's it is a tough one because the ramifications of sort of tit for tat escalating rounds of tariffs by the U.S. on China or even other countries. We obviously know that already when it comes to EVs, the Donald is on the warpath. But more generally speaking, in terms of sort of negative, and I mean, it is an impressive number that the IMF is coming up with, that if we go for a global trade war and we have this situation that has been brought on between the competition between the U.S. and China, you're losing the combined GDP of France and Germany together, it would be quite the massive hit. And so, where would that leave oil demand? Well, certainly not where it's projected currently. I think, we talked a lot about foreign issues, I suppose, and as we're getting near the end of this podcast, I'm going to switch our attention back to sort of domestic issues, and so Vincent, why don't you kick off? I mean, what can we say in terms of just top of the line implications domestically from an oil sector point of view of what either one of the candidates would represent?
Certainly. So, whilst candidate Harris has reversed her position on fracking, in which does play a large role in providing jobs in Pennsylvania, a swing state, the US oil and gas sector may face hurdles in expanding its supply, especially with a pro-energy transition policy, clean energy developments, greater commitments to reduce their carbon emissions. So growth in regulatory constraints could constrain US supply growth in oil and gas. However, with Donald Trump, we would have the opposite outcome. So reduced regulation and taxes, delayed or shelved emission objectives. Of course, notably in his first presidency, they pulled out of the Paris Climate Agreement. So reduced or lax permitting could allow for growth in oil infrastructure or waivers of RINs, both of which would be positive for supply, which in turn could see downward pressure on gasoline or diesel cracks. Of course, Donald Trump is a big believer of US energy independence, but also dominance. So we should remind ourselves his speech he made in the UN General Assembly in September 2018. So I quote, "In America, we believe strongly in energy security for ourselves and for our allies. We have become the largest energy producer anywhere on the face of the earth. The United States stands ready to export our abundant, affordable supply of oil, clean coal, and natural gas." End quotes.
Should have done the accent. Should have done the voice.
You should have done the voice. Well, that is indeed quite the statement. So, I mean, once we've said that, and obviously between regulation, environmental constraints, taxation, all this, is it really going to change something for the U.S. shale industry? I mean, a lot of people are going, it's back to drill, baby, drill. Personally, I'm not convinced. What do you think?
Yeah, similar drill baby drill. That's rhetoric and sentiment. In actuality, not so feasible because the US shale industry has undoubtedly changed in how it operates. It's no longer the wild west frontier of the 2010s when a surge in oil prices would systematically lead to more rigs being deployed, which would lead to higher oil and gas production. With now US majors are investing in the space, they're more focused on mergers and acquisitions, spending and capital expenditure. These are all dancing to a different beat, more focused on delivering shareholder returns to their Wall Street investors, which also includes focus on dividends and share buybacks. So growth in US production is more calculated. So larger companies are adopting a production target first and then deploying rigs accordingly rather than the other way around as in the past. So the days when price alone is the driver of the rig count are behind us. So the growth strategy is planned rather than being reactive, more so, and high prices would mean that companies can just lower its leverage or indeed pay higher dividends back to its shareholders.
Yeah, I think, the U.S. shale industry is no longer U.S. shale 1.0, 2.0, 3.0. I think we're now at U.S. shale 5.0 or even above. There's certainly a very different approach. And I quite agree on the fact that, you know, when you have the majors come in, the decision-making process in terms of final investment decisions, capex spending, whatever it is, at the end of the day, they're planning. And if they're planning, then they're going to tell their shareholders what the guidance is for production or what they feel that the right production level should be, and then rigs are deployed accordingly. The latest figures from the U.S. Department of Energy's statistical arm, the EIA, put for August on the monthly figures, U.S. crude production reaching an all-time high of 13 plus million barrels per day. But if you think about it, at the end of the day, when you look at where we were pre-COVID, that increment, pre-COVID to now is not exactly a massive increase in supply. We're close to 13 and change, and we're now at 13.4, at least in the August figures. That leaving aside the whole COVID period, where we obviously had to recover, but at the end of the day, that's not the massive increase that most people tend to make out of U.S. production. And I don't want to belittle whatsoever the fact that the U.S. is, along Brazil, Guyana, and one or two other countries, responsible for non-OPEC supply growth this year and next year. But I think we need to contextualize the U.S. shale patch, and it will probably be cheaper for them to run. They may be able to deploy infrastructure a little bit easier and so on. Perhaps this is going to be, again, coming back to the UN speech, a possibility for greater U.S. crude oil exports. Is it going to mean necessarily more production? Maybe not, because the shale industry is different. I mean, we talked about oil here, but I mean, Martha, what can we say about gas? Because that's a whole different matter.
Yeah, of course. So talking about gas, this is LNG. Just if I say gas, that's what I mean for any listeners. It's completely different. I think the market, how Vincent refers to like kind of the Wild West market of a couple of years ago in oil, that's kind of where we are now. There's lower regulation, more relaxed environmental standards in LNG. We've seen, building new LNG terminals, loads, approving applications, exporting LNG. It's all really, really important. I think the rate of growth of the LNG market in the LNG production in the US has been astronomical. So I think this is a particular part of the oil and gas industry where it will be really important who wins the election. So in terms of just the history of that, we've got the Natural Gas Act of 1938, which meant that gas exports, which now includes LNG, is directly under the administration's control. So if you want to export or import, if they ever do that, gas, you need the authorization of the Department of Energy because it is in the public interest of the US. So this year, the exports of LNG kind of got brought back to everyone's attention in January when the Biden administration announced a pause in approving export permits to countries that do not have a free trade agreement with the States. And this would include the largest LNG markets like Europe and China. And the explanation was the Department of Energy needed to conduct an economic and environmental analysis. So this has actually been kind of delayed. There was massive backlash, and the official finish to the delay when they've been looking at the environmental analysis is in January. So that'll be interesting to see whether they do. It will be one of the first decisions, I guess, the president has to make. So Trump would say he would end the pause in keeping with his UN speech that Vincent just mentioned. But Harris has been less clear with her intentions and whether the DOE needs to use different numbers in making its assessments. if she were to win, we could face delays in developing gas exporting projects in the US and gas availability worldwide.
Okay, so I think at the end of the day, if we're really going to sort of stereotype the issues when it comes to the U.S. oil sector and gas sector, it's all around basically environmental constraints, different agendas when it comes to energy transition that drive these environmental regulations and constraints. And then, as Vincent was mentioning, Trump pulled out of the Paris Climate Accord. At the end of the day, while a Trump presidency may not be that bullish for the U.S. shale oil supply, on the gas side, we're really looking at a situation where the availability of U.S. gas around the world is going to be dictated by how the prospective president is going to allow or not allow, or at least accelerate the permitting of exports to non-free trade agreement countries.
Yeah.
So that certainly is a big one. And I suppose, when you look at Europe and you look at Asia in general, has big implications in terms of TTF and JKM prices, right? So I think we covered a lot of ground. I think so far. So I said we were getting towards the end of our show, but that doesn't mean that we're going to forget about our crystal ball moment. I suppose there's one thing I would like to mention, and we didn't discuss this, and it really merits probably a far more expanded show, or at least we address this in a different podcast, but it's a fiscal spending issue between Donald Trump and Kamala Harris. And so when you look at the estimates of the Committee for a Responsible Federal Budget, well, Donald Trump's let's say proposed policies are going to add on a lot more debt than those of Kamala Harris in the sort of central scenario. But at the end of the day, whether the Donald adds a lot more debt than Kamala, both are adding a lot of debt to the country. I want us to wonder here around the sustainability. So if you have that much issuance of debt, that means the market has to absorb it. And if to absorb it, that means that yields have to go higher. So if we end up, because of fiscal reasons, with a high yield environment, then that tends to portend for a much stronger dollar environment. So for countries that import energy and have to pay this in dollars, this is not really good for their trade balances. And typically, we have that negative correlation between commodity prices denominated in dollars and the USD itself. So fiscally, another area where I guess both candidates sort of land on the same pad on this one. Stronger dollar through higher yields, with really not much difference in once we start adding that much debt, whether President Trump or future President Trump would add more or less in Kamala doesn't matter so much, at least in my view. It's a little bit pressure on yields. But back to our crystal ball. So there are two questions I would ask of you. Where are we going to end the week when the dust settles on the results, assuming we do have results, right? That's going to be that's a tough question. And if you were to guess, and again, it is a guess, whether a Trump presidency or a Kamala presidency is longer term bearish or bullish for oil, what would you say?
I think it would be naive to put too much trust in the polls right now. And it is important to note that there do tend to be more women doing the early voting. So that would also skew the polls. I don't think it's unlikely that Harris will win the popular vote. And Democrats have won the popular vote since 2004 with W. Bush. But that isn't all in all. I think that Trump will win the presidency, but I think there will be complications, recounts, could be 2000 again, we could be going all week, and maybe even an electoral college tie, which would end up more likely than not with Trump back in the office, with it going to the House of Representatives. But is that a bit too speculatory?
Well,
But I think that means,
where does the price go?
Okay,
As we're peering in our crystal balls, right?
Yeah.
Now, once you said that, you're giving the edge to Trump. Oh, just the edge, maybe a minor edge.
But I think due to the unrest and the not knowing, I think there will not be a clear answer by the end of the week. Wait, what did it say?
So basically, what oil
and
just
oil
fluctuates?
I think oil will inch up in the chaos and will be between 76, 78. Not
Uh,
much, not much.
Not much. So end of week, well, volatile week,
Yeah.
no doubt. And if we're assuming that it's going to take a long time to declare a winner, then heightened volatility and the range of outcomes could be very wide for the end of the week. Do you have thoughts on whether a Trump presidency or a Harris presidency longer term would be bullish or bearish for oil prices? If you had what would your gut tell you, and gut feel?
I think I think there may be less impact than would be exciting to say. I think that, as Vincent mentioned with the drill baby drill earlier, I remember last year when we were doing different podcasts with Greg that every week when we do the news segment, there would be these mergers, these mega major mergers, and they're basically dominating more and more of the basin and more of the general like industry in the US, which means that they can take the ups and downs of the industry, and it's not such a one-to-one relationship with the rig count that we saw a while ago. But I think that this kind of gives that kind of elasticity maybe to what they're able to do. And I think they need to develop the demand. The world needs to develop the demand before shipping out loads of US crude will be a viable option. So I think that there may not be that demand for a while. So I think there may not be that much development.
All right, not much development for not much demand, which tends to suggest something a little bit more bearish.
No, not much change from the situation we're in now, right now.
Okay, so we're stuck at 75.
God, it's not forever.
Vincent, what do you think the end of the week is going to look like? And if you were to venture a guess, in terms of a Harris or a Trump presidency being longer term bullish or bearish oil prices, do you have a view on that?
Yes, sure. So I'm similar to Martha actually. I would say the presidential race is pretty tight, too close to call. Maybe Harris wins the popular vote, Trump wins the gets to 270 first. But by the end of the week, there will be a good chance that there's still no clear victor. There will be some recounts. It will be controversial, that's for sure, and there will be a lot of market volatility. I read an article recently saying that a lot of traders, risk managers will be working overtime tonight and the next few days. Probably that includes a lot of our viewers as well. But in terms of the actual prices, it's not a clear-cut binary. People think it's Harris is bullish and Trump is bearish, but it's not so simple. Currently, it's very much event risk, a lot of speculation. So like stronger US dollar, gold prices, US Treasury yields are going up, but that's just all speculative at the moment. The devil is really in the details. Of course, we would have to monitor specific policies that either the Trump or Harris administration puts out. But I would say that on the Trump presidency, should there be a push for negotiations in peace negotiations in Ukraine, then perhaps less sanctions on Russia, and there's more capacity for sanction enforcement on Iran and Venezuela. So you're just replacing oil from one region with another. But of course, Trump would love cheaper oil prices for the consumer, famously saying that lower prices are like tax cuts, but he wouldn't want it too low as to undercut the US shale break evens. And he was famously combative on Twitter back then during around OPEC meetings.
Yeah, that he was, yeah.
And had a good relationship with MBS, so maybe he would have more leverage with the Saudis than.
All right, so
Biden
gun
has.
to your head, prices up or down at the end of the week?
Price neutral end of this week,
Neutral as the end of this week.
but volatile though.
So my colleagues are a little bit shy in wanting to say how we end the week and how longer term either one of the presidents would be bullish or bearish prices. I mean, obviously it's going to be a very volatile day once we start getting results filtering in, and no doubt that in terms of positioning, there's going to be a lot of movement as the candidates clarify their immediate executive sort of orders to follow their inauguration in January. But for me, at the end of the day, a Trump victory may, because of his perceived very disruptive character, maybe a bullish sign. So we sort of markets will then buy the event only to then sell the fact, or is that the right way you put it? But they'll buy the event and then ultimately sell the reality of policies. Longer term, I tend to lean, and this may, of course, be a little bit counterintuitive, but from everything we said in terms of uh, Trump rekindling the relation with Saudi Arabia to be able to bring in oil to keep prices down at the pump, which would be a tax cut. The ability to do that obviously would offset, any oil that is not coming out of Iran. We also have maybe chances for concessions from Israel relative to what's going on in the Middle East that are higher if Trump were to egg Netanyahu on. We have, of course, from an energy supply perspective, deregulation, lower taxes, etc. So, from a supply perspective, we're not constrained. All these things, at the end of the day, well, it may, and I would expect probably a lot of viewers to not share this view, but I would think that the more medium to longer term outlook for oil prices for a Trump presidency would be on the bearish side, just because they tend to favor more supply and rekindle and rebalance relations that would allow us to have the oil when we need the oil, kind of thing. President Harris, we're talking about. I mean, we have an agenda where she's gonna. I think one of you guys mentioned this, and she has an agenda that is going to be heavily dictated by the more progressive wing of the Democratic Party when it comes to energy transition, meeting net zero targets. And while you may not ban fracking, the more difficult you make it, or the more constraints you put around it, you might as well slow it down indirectly rather than through an anti-fracking law. So I would think that you have policies that would essentially slow the growth, whereas in supply. Whereas with Trump, you're probably going to have policies that favor the growth, whether we get that much growth or not. We'll see. But with that, thank you both for joining this podcast. Obviously, would love to hear your opinions on each and one of these topics. We're just giving you our view, our best view at the time. And well, by tomorrow, at least for us here in London, we will find out, and we'll see. Maybe.
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 All right, with that, well, until the next episode, smash that like button and don't hesitate to subscribe to get more excellent content. And let me do that again, more excellent content from here at all of us at Onyx. Thank you very much.